Hello everyone, this is Flora from Fabulous Accounting Solutions. Today we are going to talk about if you are an investor or share trader and the investment platforms. Before we start, I just want to ask you one question. When the stock market dropping down dramatically, just like the COVID-19 boycotts, this kind of events happened, would you change your investment portfolio to be having higher allocation of cash or fixed interest assets immediately? I give you 3 seconds to make your decisions. 3, 2, 1. Okay. I believe most of you guys will choose to change your investment allocation from shares investment to fixed rate investment. It's not right. Why? Because in this case, you change your unrealized losses to be realized losses. So you have low chance to get the market back. You already realize, you already sold most of this or all of this. So you lost all of this money. So yeah, just be careful about this. Okay, now we move to today's topic. Firstly, we're going to talk about shareholding as an investment. A shareholder is a person who holds assets for the purpose of earning income from dividends and similar receipts. And in this case, the cost of purchase of shares is not an allowable deduction against the current year income, but it's a cost base. That's a capital cost, and the receipt from the sale of these shares are not accessible income, but any capital gain on these shares is subject to capital gain tax. That means if you are an investor, you buy share and you sell share, and you need to calculate out the capital gain, so that's applied to the capital gain tax. In this case, if you invest in your personal name, if you hold these shares already over 12 months, you can get 50% discount on the capital gain you received. So for example, if you purchased 500 and sold $1,000, and then the profit less your cost should be 500, but you only need pay tax on the 50 of the 500, that's $250. That's your capital gains taxable income. How about if you do share trading as business? A share trader is a person who carries out business activities for the purpose of earning income from buying and selling shares. In this case, it's not applied to capital gain tax anymore. The receipt from the sale of shares will become your accessible income, and the purchased shares are regarded as trading stock. So that means the income should be the taxable income should be the receipt less the shares. You can't get any benefit from capital gain tax. So how to determine whether you are carrying a business of share trading? Firstly, if you think you have a business, you trade as a share trader, you must have some business plan, you must have some business activities, you must expect to involve high volume shares on purchase, a sale on a repeatable and regular basis. you must run your business just like the other business, just in a business-like way, including keeping accounts, records of trading stock. You have business places, you have lessons or qualifications for that. The most important, you have to register business name and have a registered ABN, Australian business number. And you have to prepare amount of capital you want to investment. Then you can trade just like a businessman. I give you an example to help you to know you are an investor or just a business trader. George has bought 200k shares in 20 blue chip companies over several years. His total portfolio cost 1.5 million. George bought the shares because of consistently high dividends. He wouldn't consider selling shares unless their price appreciated markedly. In the last income year, he sold 20k shares over the year for a gain of 50k. In this case, George has made a large gain on the sale of shares. He wouldn't be considered to be carrying on a business of share trading. He has purchased his shares for the purpose of earn dividend income rather than making a profit from buying and selling shares. So George more likely he's an investor. Now we move to the last topic, investment platforms. The investment platforms came into our mind. Firstly, must be big four banks. I would highly recommend CommSec, the CBA share trading platform. They got two advantages. Firstly, they are T+3. That means you don't need to deposit the money into the investment account before you get the shares trading settled. So if you know the shares you already bought, you can have another 2 days of time to transfer money into that account. But for other three investment trading platform, you must pay money in advance, deposit money into that account first before you get settlement. The second advantage, CommSec, you can open your US account and you can trade US shares. You can just open US account by CommSec and fill up the US tax form for US shares trading. But the other three banks, most likely you only can trade in Australia. Westpac got Westpac Share Trading platform. ANZ got ANZ Share Investing platform. Lab got LabTrade. The cheapest one, that's the LabTrade one. But the problem with the downside for LabTrade, that's at the each financial year end, they wouldn't give you franking credits details for each dividends you received. So it's not good for tax return purpose. But besides that, if you only want to invest in Australia shares, I would highly recommend you invest through Self-Wealth. This platform is choice holding, so it's really safe. You don't need to worry about the safe problem, and it's the cheapest one. They only charge a brokerage fee of $9.95 That's a flat rate per trade after the first 5 free trades, and they won't charge any monthly account fees. So that's the cheapest one if you want to invest in Australian domestic market only. But if you want to invest overseas like the US market, yeah, I would recommend you choose the CommSec. This one's much better than the other 3 big 4 banks. So that's all for today. If you like my channel, please hit like button, leave a comment, share with others, and subscribe to my channel. I will have new videos every Sunday. So see you next time. Bye bye.